Hello everyone, we're joined by Seth Hertlein. He is the Global Head of Policy at Ledger. Seth, welcome to the Elliptic booth, number 621, Bitcoin 2022.
Thanks a lot, Kate. Great to be here.
Yeah, thank you for joining us. So you are a Paris-based company.
That's right. Ledger is a proud French company. We have around 600 employees. Most of them are in Paris.
Right.
But there's a thriving startup scene too, with a lot of new high growth crypto companies and projects there, particularly around the NFT space. On the product side, some really exciting stuff is happening at Ledger. So, Ledger is known as sort of the premier hardware wallet company. The Ledger Nano line is one of the best-selling crypto hardware wallets in existence. I think just yesterday we announced a new product, the Ledger Nano S Plus, which is a hardware wallet specifically designed for NFTs in addition to all your crypto.
So as someone who's working on the regulatory side, working with United States regulators, quite different from working with those overseas. Do you change up your strategy when you're working with regulators in Paris versus the United States? Like, what is your strategy for getting your company's message across?
It does absolutely require a different approach and different tactics because of cultural differences. Sort of figuring out the best way to say something or the best way to approach something is often different there than it would be in Washington.
Right. And so have you found like a strong community, outside of Ledger's company, have you found a strong community in the EU of like-minded people who, have similar lobbying initiatives or like industry initiatives as yours?
There is, but I would say that it's maybe 2 or 3 years behind where we are here in the States. The industry is smaller there, but I found than in the U.S. and the public policy activity level is much lower, but that's starting to change. There have been a couple things recently that have come out of Parliament in Brussels, particularly a near miss on an outright ban on Bitcoin trading on the continent. Came 4 votes short in committee of passing. And then followed right up on the heels of that is a regulation that passed just last week called the Transfer of Funds Regulation that is quite concerning to most of the industry there. And the response to that has been to sort of sound the alarms on crypto Twitter, which worked on the proof of work ban. It didn't work on transfer of funds. But I think what we're sort of collectively learning is we have to get organized. Reminds me in a lot of ways of the infrastructure bill fight in the Senate last summer. In the U.S., that was the point in time where everyone realized, we have major policy exposure in Washington that we've been ignoring for far too long.
Right.
We've got to start doing something about it, and that requires investment and building out public policy apparatus. And I say this all the time, but having good public policy, good public affairs is a lot like having a good insurance policy. Right? If you wait till the house is on fire, it's too late. But unfortunately, I think that's what it takes a lot of the time because businesses, particularly startups, are like laser focused on growing their business.
Right.
And it's hard for them to sort of dedicate the time and the resources and the mind share to engaging on policy until it really gets forced on them and they realize how important it really is.
We're not always going to see eye to eye with the regulators, but I think people like yourself and people who work more on the lobbying side in the United States, like that's sort of the directive is to figure out how to merge the interests where they might be competing.
Yeah, I think that's absolutely right. I mean, look, regulators are going to regulate, legislators are going to write laws, and they can either develop those policies based on a foundation of knowledge and education, or they'll do it without. And I think it's incumbent on the industry to help educate them. The ripple effect of Libra is still being felt.
Yes.
So MiCA, which is the regulation I was just referring to about the proof of work ban in Europe. It's called the Markets and Crypto Asset Regulation, and it is a direct response from the European Union to Libra. And even after Libra's demise, MiCA has evolved in all these different directions, up to and including an outright ban on Bitcoin. So, these things, we can either be part of the process, or stay on the outside looking in. And I think, there will always be some part of the community that, stays true to that, its libertarian origins. But when you start talking about, mainstream adoption, enterprise level adoption, you've got to have compliance, because, at that scale, at that level, those types of companies and businesses have to deal with regulators. They have to comply, and the options are figure out a way that they can comply with crypto, or leave it, or just not touch it. The regulatory burden that exists on banks in the United States is incredibly high.
Yeah.
And as a result of that, it's very hard for new challenger banks to come online. It's very expensive. It's very time intensive. And so, we've seen over, especially since the financial crisis in 2008, sort of really extreme consolidation within the U.S. banking industry. Small banks close up shop, old banks close up shop, and we end up with sort of a few mega banks that really control the industry and have this really strong regulatory moat around them that protects them from competition, which is not a good thing for the consumer.
Yeah.
And so I would caution, sort of replicating that bank regulatory model in crypto.
That's a fair point.
Because one of the things that makes crypto so exciting and so dynamic is, the amount of competition. I mean, just here around us in this space, there are so many companies that are a year old doing really cool things.
Yeah.
And if they all had to comply with bank level regulations, this would be an empty room.
Crypto is sort of just finding its footing, and I think it can have the beauty of the banking system with, like safety and insurance and like that sort of structure, that, consumer confidence, but, maybe do it right from the beginning and actually make an environment where innovation and competition is encouraged, because that's the beauty of the United States, is having competitors.
And I think that's the challenge. You said, so doing it right from the beginning. And I think, our job in the industry is to help educate policymakers about what that means. And there's always a temptation whenever a new technology comes along to just sort of shove it into one of the old boxes, right? And we've seen this time and time again in crypto, where the knee-jerk reaction is, well, shove it into the banks, or shove it into investment companies, or shove it into securities. And I think the way that we get it right the first time is by convincing policymakers that this really is new and fundamentally different, and deserves a bespoke regulatory regime that fits and reflects all the differences between disintermediated finance and the old way of doing things. So sort of getting engaged in policy is relatively new at Ledger. And we're starting with the basics, which is just building relationships, building trust, demonstrating to policymakers that we're a reasonable and compliant actor in the space, and someone that they can work with. And I think that's always step one, whether it's in Washington or Brussels or Paris or wherever.
Awesome. Well, thank you so much for joining me. It was really a pleasure to speak with you. And good luck with everything in the future. I'll be paying attention to the future announcements.
Likewise. Thanks for having me.
Yeah, thank you.